Hey everyone, welcome back to Corporate Decoder. Today, BlackRock Monticello Debt Real Estate Investment Trust, or BLKM as it is known on the market, just filed an 8K, and I am spotting two major new credit agreements that investors need to understand. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company has taken on significant new debt recently, and understanding the terms is key to seeing where this company is heading. So, what is happening here? Well, BlackRock Monticello Debt Real Estate Investment Trust is a real estate investment trust or REIT, and these types of companies often use debt to finance their operations, especially when acquiring new properties or loans. This filing is basically announcing they have signed two new big credit deals. First up, on the 1st of June 2026, one of their subsidiaries, B.L.K.M. VLC, signed a credit and security agreement with ConnectOne Bank. Think of this as a loan deal. This agreement, called the ConnectOne Credit Agreement, is for a maximum of $100 million. But here's where it gets interesting. They can actually increase this amount up to $150 million. This means they might need even more money later on. If they can get the bank and other lenders to agree, the loan is set to mature in June 2029, but they have the option to extend it for another 2 years. This flexibility is good, but it also means the debt could hang around for longer. Now, what are they putting up as collateral? Well, this loan is secured by a first priority perfected security interest in the borrower's assets. This basically means ConnectOne Bank has the first claim on the company's commercial real estate loans and other assets if something goes wrong. It is like a super strong guarantee for the bank. The interest rate on this loan is tied to the term Secured Overnight Financing Rate, or SOFR, plus a spread. SOFR is a benchmark interest rate, and adding a spread means the cost of borrowing will go up and down with market rates. Importantly, there is a SOFR floor, meaning the interest rate will not go below 3.00% per year, even if SOFR drops lower. They also have to pay fees like a commitment fee, which is a fee for agreeing to lend the money, and a non-usage fee if they do not borrow all the money they are allowed to. These fees add to the overall cost of having this credit line available. Then, just a few days later, on the 4th of June 2026, another subsidiary, B.L.K.M LLC, entered into a master repurchase agreement with Nomura Corporate Funding Americas. This is a repurchase agreement, or repo, and it is a way for companies to borrow money using their assets as collateral. In this deal, Nomura will buy eligible loans from the subsidiary, and then the subsidiary agrees to buy them back later at a slightly higher price. The difference in price is essentially the interest paid on the loan. This agreement has an initial maximum purchase price of $250 million. This deal matures on the 4th of June 2029 with an option to extend for another year to June 2030. Again, if certain conditions are met. Similar to the ConnectOne deal, the company's obligations here are secured by a first priority security interest in the purchased assets. The interest rate on this repo is also tied to the term SOFR for a 1-month period plus a margin that is agreed upon for each specific transaction. On top of that, there is a fee of 25 basis points, which is 0.25% on the amount funded each time they draw money. They also have to pay commitment and extension fees. Now, this is also very important. BlackRock Monticello Debt Real Estate Investment Trust, the parent company, has provided a guarantee for this Nomura agreement. This means that if the subsidiary cannot pay back the money, the parent company is on the hook. And here is the kicker: this guarantee might become a full recourse obligation for the company, meaning they could be responsible for the entire amount without certain limitations, depending on specific events mentioned in the guarantee. This significantly increases the risk for the parent company itself. What this all means is that the company is significantly increasing its borrowing capacity. They are bringing in a total of potentially $100 million from ConnectOne Bank and another $250 million from Nomura Corporate Funding. That is $350 million in new financing capacity. This suggests they have plans to expand, perhaps acquire more real estate loans or properties. However, it also means their debt levels are climbing and they are placing more of their assets as collateral. This makes them more vulnerable to interest rate changes and any downturn in the real estate market. Looking at the exhibits, these agreements are clearly laid out. Exhibit 10.1 is the ConnectOne Credit Agreement. Exhibit 10.2 is the Nomura Master Repurchase Agreement. And Exhibit 10.3 is the guarantee from the parent company. These documents contain all the detailed terms, warranties, covenants, and conditions that are standard for these types of financial agreements. So my take on this is that the company is aggressively pursuing growth, leveraging debt to fuel that strategy. On one hand, having access to this much capital can be a powerful tool for expansion. On the other hand, managing such a large amount of debt, especially with floating interest rates and potential recourse for the parent company, carries significant risk. The company's ability to generate enough income from its investments to cover the interest payments and principal is going to be critical. Investors should pay close attention to how these new credit lines are utilized and the company's performance in servicing this debt, especially if interest rates continue to rise. The risk I'm watching is how quickly they can deploy this capital effectively and generate returns that outpace their borrowing costs. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if you found value in this analysis. Please like this video, subscribe for more, and join our community Discord linked in the description.